Ethan Penner, you are the father of commercial mortgage-backed securities. There's a bipartisan bill in Congress that would bail out the market you created, yet you write that it's wrong, plain and simple. Why?
Well, the way the bill is aimed, there's so much that seems wrong about it to me. And I think it betrays a lack of fundamental understanding in how the market was set up and how it evolved and what its fundamental shortcomings or flaws were. And I felt the need to articulate some of that so that it becomes part of the public discussion.
Commercial mortgage-backed securities, or CMBS, are one of the few corners of debt markets that haven't reflated, if you will, thanks to Fed stimulus. Junk bonds, CCC rated junk bonds, are back to where they were before the pandemic. Yet if you look at a chart of the BBBs, for example, on the CMBX index, you'll see that it's still trading way down. I don't need to show you this, but others may want to have a look. There are many people out there, Ethan, who say, why should CMBS be ignored when all these other debt markets have been juiced back to life by the Fed?
Well, you know, it's not exactly analogous, Eric. The corporate bond markets that you reference are trading where they're trading. There's certainly Fed impact there, but money wasn't sent directly from the government. Taxpayer money wasn't sent to all of those borrowing companies to support their business models and bolster their debt values. And if the free market wants to invest in CCC rated corporate bonds at levels, wherever levels the market wants, that's the market's business, right? That's investors' choice. The CMBS legislation is very different. It proposes directing taxpayer funded support at highly subsidized interest rates that are way off market and putting that taxpayer money in a very at-risk position called preferred equity, and specifically earmarking it for defaulted borrowers who specifically borrowed through the CMBS mechanism. It doesn't even begin to make sense because it doesn't actually treat other borrowers who might have similar problems but had borrowed from banks or had borrowed from other lenders, not CMBS, and might find themselves in the same plight. So why would legislation favor one type of operator who borrowed from one source and not versus others who did not? It just doesn't make any sense at all.
One of the points you make in your essay, Ethan, which is published on Medium, and people can find a link to that essay in our Bloomberg story, is that bailing out the CMBS market in the manner prescribed by this bill would benefit wealthy and, in your words, in some cases, greedy investors. Who are we talking about?
Well, you know, this wasn't intended to be pointed towards any specific borrower, but really to talk about how CMBS has, one could say, evolved or possibly even say devolved over time. You see that in the formation of CMBS, there's a certain construct that is problematic, and it's specifically problematic for those who borrow through CMBS and whose loans run into some challenges. And we saw that play out in a very public and large way in the wake of the great financial crisis in 2008 and 2009, when many borrowers were frustrated in their ability to literally get someone on the phone from the CMBS world who can help them kind of deal with their problems, deal with their restructurings.
So if I understand what you're saying, if you want to be in a position to have your mortgage loan, as it were, modified, if you want to renegotiate because you run into trouble, you know, for reasons such as a pandemic, you shouldn't go to the CMBS market because there's no lender to negotiate with. It's a bunch of bondholders, and they're represented by a servicing agent, or if the loan gets into trouble, a special servicer, and that's just not where you want to be. Is that the point you're making?
That's correct. Everyone who is a professional should have known that that was a significant risk of borrowing through CMBS vis-a-vis other sources. And whoever chose to take that risk has now found themselves in a bit of a pickle.
Ethan, I'm going to quote from an email that I received today. It's a critical email. This person is not in favor of your point of view. So forgive me if this sounds quite direct, but I have a feeling you might have heard other people saying similar things today. Quote unquote, this guy's an idiot. In California, the state and local government have ordered commercial tenants to shut down their businesses. Tenants do not have to pay rent by order of the government, in all caps. Meanwhile, landlord property owners are receiving no concession from the lenders, i.e. CMBS servicers. This is the point Tom Barrack made to me months ago. He calls it a government taking. If the government takes something from you, shouldn't the government have to give back to you in another form, such as a bailout bill?
Well, first of all, I don't take issue with the characterization in that email about me. But I do.
I hope you would take issue with it.
Well, I have 5 children, so I get to hear stuff like that all the time. But I do take issue with some of the assumptions. For example, in my firm, we have property in California, commercial property, and people pay rent. So I don't think that this there's not been a kind of broad government mandate dictating to tenants to discontinue paying rent. I think that's a falsehood. I think there's no question that as a result of this pandemic and the economic malaise that it led to, there's no question that there's serious problems that permeate many areas of commercial real estate, and especially probably hotels, retail, and to a certain extent office. And owners of those properties who have borrowed are definitely facing challenging times. But those who have banks or insurance company lenders or private credit lenders who they can call are so far finding sympathetic ears on the other end of the phone, who understand that this was a problem.
Ethan,
that.
Forgive me
Yes.
for interrupting, but before we run out of time, there are employees of these hotels, of these malls, shopping centers, et cetera, who are suffering as a result of the pandemic. So what should the government do for them?
Eric, can the government know which malls are going to reopen and which malls are not ever going to reopen? Or really which businesses are going to reopen and how soon it'll be before they can rehire? We can't say for sure. So for the government, if the government wants to support these individuals, which I can certainly understand that, the cleanest way to support them is how they've been supporting them, which is send checks in the mail in the form of unemployment remittances or other form of direct remittances to the individuals. But to have that money pass through the hands of property owners or business owners is a highly inefficient way to support them in this